Welcome, this is lesson video number 2 of my 6-part lesson series covering everything that I've learned in the last 10 years of trading experience, then breaking it down into 6 major must-learn concepts that essentially I wish someone told me about and also told me how to put together in a very specific way, combining all these factors so that I could have such accurate technical analysis and make such good trading decisions. So if you guys haven't already watched lesson number 1, uploaded 1 week ago, covering sweeps on significant levels, then go back, watch the video. This is the one. I have it on screen right now. Watch that video first. Today's lesson is number 2, directional bias. And this one is incredibly important. I wanted to cover it at the beginning of the lesson series because it ties in with all of the other concepts. So before getting into all of the details here, I do want to give a shout out to my Discord group. This is a free group. Just message me on Twitter or X if you want me to add you. Just simply ask me for an invite link to Discord and I'll go ahead and send it to you. This group, I'm posting updates about Bitcoin and altcoins and also Forex when the time is right. But recently I have been focusing on crypto for the last 9 months or so, just because that's where all the opportunities are at the moment. But I'm sure in the future, when the opportunities present themselves in Forex, I will be posting more about that. But talking about the positions that I'm taking sometimes, talking about what I'm expecting next, updating it frequently. So check it out if you're interested. Got about 264 people in there now. I just created this group pretty recently, so it's going to be growing over time. Now, let's get on to my plug for my affiliate, BingX Exchange. If you guys need an exchange to trade on, check out my affiliate link in the description for BingX. No KYC required, so if you can't use most exchanges due to KYC requirements, check out BingX. They don't require KYC. Plus, they allow you to trade crypto, stocks, Forex, indices, and commodities. So, pretty unique exchange. Check these guys out with my link if you're interested, and I'd appreciate that. Now, let's get into the lesson, directional bias. Now, to start this lesson out, let's talk about why directional bias is so important. The reason is because it gives you an automatic edge. So what does that mean? Well, I tested it. I tested a rules-based system of determining directional bias. So meaning when this rule tells me to only trade to the upside, I only trade to the upside. When this rule tells me only trade to the downside, expecting downside continuation, entering a short position, only take short positions. And so I tested how often, based on a rules-based directional bias, do trends continue. So based on the data and also depending on the asset or what I'm testing, it seems as though trends continue about 60 to 65% of the time, which automatically gives you an edge in the market. That's why this is so important. You have a free edge just with a simple rule to determine what the trend direction is, telling you what direction to trade in. So that's why it's important. That's why we need to cover it, because all of these other concepts, sweeps on significant levels, hidden divergence, regular divergence, momentum, funding, spot premium, open interest, all of this stuff ties into the directional bias because we need to know which direction to be looking for a trade, of course. So this video is going to be pretty simple. I'm simply going to cover some ways that you can determine the directional bias and what direction to be trading in. And that test that I did with the 60 to 65% trend continuation rate, it was based on, in a trend, once we get a pullback, how often does that pullback lead to a trend continuation move? So essentially a higher low, higher high type of scenario. And I did that based on resets of the stochastic RSI that determined what a pullback was. But I have videos on that on my channel already. So just saying, guys, directional bias gives you an edge automatically. That's essentially, like, from a practical perspective, that's all you need to know as of right now. You can go watch the testing videos. I have those on my channel still, so I've done that quite a while ago. Now let's talk about directional bias. How do we actually determine it? Well, it really helps to have indicators that just tell you what the directional bias is. So let's go through the indicators that I actually have on my chart right now. Starting with the Trade Pro rejection zone indicator. This is a free indicator, and the one I'm talking about is this green and red cloud. So Trade Pro rejection zone indicator, all it's doing, plotting two moving averages, exponential moving averages, and when they cross 20 period, crosses up over 50 period exponential moving average, we have a green cloud. 20 period crosses below 50 period, we have a red cloud. It's as simple as that. And that directional bias alone gives an edge. I've tested this specific one, and it had 63% continuation rate after pulling back into the cloud. We get continuation of the current trend about 63% of the time using just that one simple rule: green or red cloud, black and white, simple as that. So that's what I'm talking about. Directional bias giving you an edge just with one simple rule. Now we can get even better by combining multi-time frame analysis and also different types of moving averages. So that's why I'm showing a few different ways, but if you want, you can keep it extremely simple and just use one method, one time frame, and still you can gain an edge through just doing it that way if you really want to be extremely simple. So that's the green and red cloud, Trade Pro rejection zone indicator. You can search it for free. It's on the public library of TradingView. And then now the other one. So we have a 200 period exponential moving average. This is daily time frame. I have it on right now. And then the blue one here, that's a 200 period exponential moving average, but it's the weekly time frame 200 EMA. Okay, so let's talk about why it can help to have a greater perspective or a few different ways to determine trend direction and to not get caught up on the wrong side of the trend. And another thing that's actually outside of just indicators that are purely black and white, trend is up, trend is down, would be impulsive or corrective. So we can combine a few different things, and we'll just get into it by going through here and talking about what I was analyzing throughout this trend. Why did I have the bias that I had throughout this whole uptrend that we've seen in the last year or so on Bitcoin? And I've made all the videos about it, so you guys can go watch those analysis videos and see what I was saying in real time when price was trading right here at the 200-week exponential moving average. Why was I so bullish here even though we had a red cloud? So let's get into that and talk about how to practically utilize these things to give us an accurate directional bias. So here, we get a strong move to the upside. We get our green cloud here on the daily. And so we have an uptrend. We have a pullback. Not only are we over the 200 period exponential moving average of the daily, but we have our green cloud. We pull back into our green cloud, tapping the 200 EMA of the daily time frame. And we get our continuation move hitting our 200-week exponential moving average, right? So directional bias since here was to the upside, and I have videos talking about that back here in January of 2023. So remember last video I talked about sweeps on significant levels. At this level, as we hit this 200-week exponential moving average, we also swept a significant level here. What did I talk about in that lesson video number 1? Expecting a pullback or at least consolidation or pause at a significant level after sweeping a significant level, right? So that's what we get. We get a pullback. Our green cloud stays green throughout here. We sweep some significant lows and then we continue higher. Now, during this phase here, this corrective phase, we actually go red on our cloud. But why did I stay so bullish? Well, this first one was easy. Not only do we have an impulse to the upside, a strong impulsive movement to the upside, followed by very corrective, choppy price action, gently coming to the downside, but we also come straight down to our 200-week exponential moving average and our 200-day exponential moving average, telling us that we are in a higher time frame uptrend still. Once we come down here with other factors in mind, hitting these levels here, bullish divergence was present, funding rates, very low, spot premium. A lot of things that we can talk about, which you'll learn more about in the other lesson videos, but things were looking very good as we came down to this level, and our directional bias was still to the upside even though we had this red cloud. So we take a look at all factors available to determine what our directional bias is. And of course, as I said earlier, you can stick to just one method, but I'm talking about how I combine different factors, multi-time frame analysis, to have a better perspective. Now, we come up, we make a higher high, and then we come back down. Now, why was I still so bullish? Well, it's because strong push to the upside, nice 3-wave correction, and I have videos as price was trading right here down at the 200 weekly exponential moving average, saying this exact same analysis in real time and expecting we would see that next move out of here towards next logical levels. So the high here, and then also the next high up here at 48.2, next significant levels. So not only do we have that retest there, but at that time, we actually already had our cross of the 200 daily exponential moving average over our 200 week exponential moving average. So almost like a higher time frame sort of view into this trend, besides just our shorter time frame green and red cloud of the daily time frame. So this 200 daily over the 200 weekly is our higher time frame view of what this overall trend is. And then we say we have impulsive movement to the upside, nice 3-wave corrective price action sideways. So you can go back, look at the videos, the analysis I was doing in real time while price was trading right down here. This is exactly what I was saying. So we get our move. Ever since that move, we've maintained a green cloud throughout here. We've maintained over our 200 daily and 200 weekly exponential moving averages. We never flipped red here on our green cloud. It stayed green throughout here. And so directional bias can be very simple, but of course you can utilize other factors if you wish to do so, or once you gain more experience, you can start experimenting with other things and if you want to get a little more advanced. But these are some simple ways that you can determine directional bias, and you can do it on multiple time frames to have an even greater perspective for what the overall directional bias should be, what's most likely going to be the overall trend direction. Okay, so when we have our trend direction, it helps us line up everything else, all these other factors, so that we only look to get into a position with the main trend direction in mind. Okay, so while these 3 are great, just exponential moving averages, the cloud with the exponential moving averages of a lower time frame, or a lower period, I should say, crossing over, I'm sure there's plenty of other indicators out there that do a great job at determining directional bias as well. So you don't need to use these ones, but these are just some examples of ways you can determine directional bias and essentially give yourself an edge very simply and easily when making your directional bias decision. So that's pretty much all I need to cover for this video. Directional bias is quite simple. It can be made even much simpler than what I said here. You could literally have just a 200 period exponential moving average and still gain an edge from the directional bias. So you don't need to combine all these other factors, but I figured I would talk about them so that you can see how having a greater perspective may be able to help you. If you practice, you gain some experience, and if you're brand new, you might want to just start by testing out with just one of these, or having some simpler way to determine it where it's more black and white, just yes or no, is price over this level or over this exponential moving average, to determine your directional bias. But again, you guys can test it, figure it out for yourself what you want to do, but just giving some examples and showing how I was able to determine directional bias throughout this whole trend, why I was so bullish starting all the way down here. So that's it for this video. Thank you guys for watching so much. Next video coming out in a week, so make sure that you guys have watched the first one and the second one before next week's third lesson comes out. Bye-bye now.